Hello traders and welcome to another video review. Today is Wednesday, July 29th, 2026. Let's take a look at the Forex economic calendar for today. The high important data releases are scheduled for release mostly during the US session, and what do we have here is crude oil inventory is scheduled for release at 4:30, and then Fed interest rate decision and the FOMC statement scheduled for release at 8 p.m. The market participants expect Fed to hold the interest rate at the level of 3.75%. 30 minutes later at 8:30 there is a FOMC press conference. So today is the major event of the week, especially if the results or the outcome of this event will surprise the market participants. So that's about the high important data releases. Without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar, as you can see, bounced from the level of 1.1368, local low 1.1354, and we are testing the local trend line yet again ahead of the interest rate decision. We are out of this blue channel already. The breakout has been tested as well yesterday. Now the bulls are trying to move higher. Nevertheless, from the technical point of view, the upside is capped by the descending trend line, and it looks like with this momentum there is not a lot of a chance for a breakout. Obviously, if the Fed interest rate decision will be in favor of the euro bulls, then the breakout to the upside is obviously possible. Please notice that we are still trading inside of this big yellow channel, and we are right now in the middle of this channel already. So not much happened here. Market is positioning itself ahead of the interest rate decision. Cable is out of the channel these days, and the level of 1.3272, the technical support, had been tested, and for now we have a little bit of a bounce here, and the level of 1.3280 is right now, or 95 even, not 80. Nevertheless, this level here is now technical resistance. So very narrow range is being traded these days. Momentum is negative, only 40 points. We are a little bit out of the channel. Nevertheless, we can switch this. We can move, not the switch, but we can move this channel a little bit in the other direction, because the newest data are showing us that this situation here might be okay. This is all right, but what we need to do is to move this a little bit lower. There you go. So maybe something like this is accurate. So I've moved the upper channel line to the newest level here, 1.3362, and now this market is still inside of the channel, but there is a situation, there is a possible situation that this channel might be already violated. So let me just attach this level, this upper channel line here. There you go. So this is how it looks now. Market is waiting for the Fed. US dollar versus the Japanese yen, range trading right now between the technical resistance and swing high 164 and the local technical support located at the level of 163. So 100 pips trading range. Right now momentum is way below the level of 50. So bears are in charge of this market in the short term, and the projected target level after the breakout from the possible triangle pattern has not been hit just yet. We hit like half of this target, and again the market is positioning itself ahead of the Fed interest rate decision. We are waiting for the decision these days. Gold market busy doing nothing inside of the trading range, as you can see right now. $4,044 negative momentum, 46 points only on the 4-hour time frame chart of the RSI. And for now, it doesn't actually look like this market wants to do something special these days, still inside of the bigger range. And we can see that the market is again positioning itself ahead of the Fed. S&P 500, well, there is a fight. There is a fight for this area here inside of this descending blue channel. Momentum at the 50 points, 51 points. So basically neutral momentum, and as you can see around the level of 7,400, 7,430, bulls and bears are fighting for the dominance on this market, because breakout lower is very bearish in the short term. Breakout higher will confirm the support of this trend line. These days, of course, we got the local low a little bit lower, 7,245. Yes, 7,380. Nevertheless, it's still some sort of the possibility for a breakout to the upside if the trend line and this area here holds, right? So we are out of the blue channel, targeting 7,600. For now, it still looks like this market is just for today waiting for the Fed, positioning ahead of the Fed interest rate decision for a potential surprise. If there is no surprise and the situation is like it is, possible breakout to the downside is limited, and the upside movement is way more probable for this situation. Crude oil made a low at 77.78, just above the 61% Fibonacci level at 77.16. so the retracement level almost has been hit, but we almost hit as well extremely oversold conditions, which is why we are moving higher a little bit towards 83.27. This is the local high. So as you can see, we can basically remove our Fibonacci's unless the market wants to go towards this 61 Fibonacci retracement level to the pip, to the cent, basically. But for now, very nice, strong, very strong, very dynamic, very aggressive sell-off, corrective sell-off. And now the question is whether the situation is that the situation here will develop to the upside. It will cover the gap, fill the gap, and then break above 93.48, or maybe there will be some sort of the gap cover and then reversal lower. We will see in the nearest future. The Bitcoin yet again trying to move higher. Nevertheless, look at this trend line. I think it's quite useless. I think this is not the time for the trend line breakout or something like this. We went towards the level of 32 points, almost 32 points. So almost extremely oversold conditions. Now we left some sort of the local penetration of the level of 65,233, 62,553, and this is the pin bar here, penetrating this lows, and this technical support, local technical support, has been defended. So now we have the pullback. RSI almost 52 points, so basically neutral. Nevertheless, there is a potential for higher movement, upside movement, a little bit more towards 65, 66,000. Nevertheless, look at this. We've been oscillating up and down, up and down. Look at the momentum, up and down, up and down, up and down, up and down. Look at the momentum. We are oscillating, sometimes not even towards the extremely overbought conditions, but a little bit below this level, a little bit of the extremely oversold conditions, 37, 35. So this movement here is definitely not impulsive. This movement here is definitely corrective in nature, and we should see further movement to the downside soon. Because this is basically the market. This is the characteristic of the market that doesn't know where it wants to go these days. And because in the background there is a very strong downside swing, we might see some sort of the continuation of this previous trend, downtrend, in our situation, obviously, right? So Let's wait for the Fed interest rate decision for today, so we will see tomorrow what is the situation, how the market reacted, and what can we, how this can be helpful for our scenarios. For now, thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye bye.